What's up, guys? So today I want to go over some price action concepts on GBPAUD. And this pair in the last little while has been giving us some prime examples of market maker behaviors that if we can identify, we can increase the probability of having profitable trades, because the market makers are controlling the vast amount of liquidity in the market and are responsible for the larger moves that we want to be a part of. We always want to be trading alongside the market makers, not being the liquidity for them to take. So let's get right into it. When we have these movements that are what retail traders would call momentum, often the first pullback in these movements is not the reversal. It's market makers who have been riding this price and now they're taking profit. The thing about this is retail traders tend to chase the market, right? Most of the people, most of the retail players in the market who don't know what they're doing tend to chase the price. When it starts going a direction, they think just because it's going that direction, they need to follow it in that direction. And they end up being liquidity for market makers to buy back in, right? So think about this. If market makers had bought down at these lows and they're pushing the price higher and higher and higher, retail traders, when it gets up to a place where it's been going for a while, because this is the irony of it, when it's been going longer, people think, oh, well, it's more likely to continue because it's going longer, which is false. Sometimes it's true, but for the most of the time, if market makers have been riding the price from down at these low prices, this is a great opportunity for them to sell, because when there's a lot of demand long, in other words, a lot of retail traders looking to actually buy now that they're convinced that the market is going higher, this is a great opportunity for market makers to sell their shares to them at a great profit. Now, when it starts going down, you begin to have that confusion ensue, where then the retail market is saying, oh, it's actually going down. Now that I see that it's going down, let's sell it. So they start selling it, and now this is where the market makers can buy back more shares. They just took a great profit right here, but they want to push it a little bit higher. Because also remember, whenever we have zones of essentially accumulation and distribution, such as this, you're going to have orders building up on top of this and on bottom of this, which we'll get to. Okay, so the orders building up on top of this are people who are saying, oh, if this continues, I'm going to buy then, because then that's quote unquote proof to me that it's going higher, which is another falsehood. It's another trap that people fall into and end up being literally food for the market makers. Okay, so this here is an example of the essentially volume being taken at highs, right? We have this bearish engulfing coming and just almost taking this previous bullish candle. So what's going on here is all of the orders and liquidity that's stacking up above this zone. Now market makers bought back here, they bought a little bit more here, they pushed into this zone, and now they're selling it off. Once again, they took all the liquidity on the top of this region. And now look, here's another perfect example of that. The market pushes low, and right here you're going to have a lot of people coming off of this initial push low that are thinking, now it's bearish, now I got to sell, because they want the quick move, right? They want the quick money, they want the quick profit, but the market takes its time. If there's anything you take from this video today, it's this. The market, 90% of the time, I'm not even going to put a statistic on it, but the market takes its time when it's making a significant move. It's usually not now it's going up and now it's going down on these larger time frames. In other words, the larger movements. A lot of people are impatient in the market, and that's why they lose money, because as soon as they see it going down, they're thinking, oh, I got to sell, I got to sell. And you get so many people selling at these regions where it's profitable for market makers to start buying up all of those short positions, right? There has to be a sort of balance and liquidity in the market for the market to actually change direction. In other words, if there's so much seller demand right here and the market makers were to sell their shares into that, they would lose money. They're not going to lose their money, right? So when you got a bunch of people selling right here, it's advantageous for them to buy back. And then look, here we have in this blue zone right here, another version of this gray box, where we have orders that are stacking up on both sides, right? People that are thinking, oh, well, if this starts going long again, I'm going to buy it. Okay, so we'll come back to that in a moment. Now we have the market, after taking its liquidity right here, pushing back down into this region, right? The quote unquote real move. This didn't take out any lower lows. This wasn't actually a change in trend, but this was enough pips where you could have actually gotten into a decent position here had you been patient. Had you seen that it pushed low and then it came back up here to take more liquidity, didn't end up breaking this zone, and then now it's going to push low. So again, we rejected this zone, but look here how the exact same thing happened, right? We have bullish quote unquote momentum, and then we have the initial push down and a fake out. The initial push down and a fake out. People being impatient and coming down, and now they see it going down again. This is another version of this same move, but on a more macro scale, which is what I'm believing this is right now, where we have price pushing down into these lower levels. And because of that, you had a lot of people after this big bearish candle. You know, retail traders love these big imbalanced candles. They're thinking, oh my God, it's selling. I got to sell. I got to go. Like, I got to get in now. And this candle right here, and this candle right here, and this candle right here, and then eventually this one that literally took all the volume right out of this, that is the result of having too much seller demand at a low level. Okay, and now here's what's happening at this low level. Because like I said, we come back to what's above this region. You have traders here that are looking to buy the market if it breaks above this region, because they're convinced that if the market breaks above this region, it's going to be long, right? So they're waiting to see this break happen. Then you have traders who are selling here and have placed their stop losses above here, which a stop loss for a sell order is a buy order. So you have a lot of long volume being built up above this range. So my thesis on this is, and this is not financial advice, obviously nobody is correct in the market 100% of the time, but my thesis based on what I have told you so far is that this move that pushed above this region has effectively swept the liquidity of the people that were pending long and the people that were short and are getting stopped out above this region. So I think so much liquidity has been taken up here that we may have completed the long cycle and we could be looking for some lower price action. Because like I said, we then have this box where we had the orders filling above and they took the long orders right here. Well, there's still the volume below these levels that we need to consider. So I think there is a possibility we could get down into the 2020, essentially, right here, and maybe even lower. I'm not going to speculate beyond that. But based on the fact that liquidity has now been taken, this zone has been swept, I think there's a high probability that these orders they accumulated need to be distributed at a lower level, right? They are selling to the buyers up here. So now they have short orders, okay? It'd be advantageous to take them lower so they can start buying back at lower prices and taking profit off of those short orders. So, my friends, I hope that makes sense. I hope this is giving you some insight into price action. Remember, nothing is ever a guarantee in the markets. Always manage your risk. Be smart about your risk. The way that you're going to stay in the market is if you're not over leveraging, if you're being responsible and respectful of the market, essentially, right? If you don't respect the market's not going to respect you. But know that when we can understand these behaviors of market makers in the market, it can help us to formulate higher probability setups and then become more profitable over time. All right, guys, that's all for today. Happy trading. Peace out.